IFRS is a single set of accounting standards developed by London-based International Accounting Standards Board, or IASB for short. IFRS is a less extensive body of literature than US GAAP.
IFRS is currently used in over 130 countries. The entire industrialized world is either using IFRS or in the process of converting to IFRS, except the United States. The first wave of adopting countries, the European Union, South Africa, and Australia, adopted IFRS in 2004.
China began alignment with IFRS in 2007 and hopes for a 2012 adoption. China has experienced some difficulty with the conversion due to the difference in standards from the old state-run accounting practices to the IFRS rules.
Israel transitioned to IFRS in 2008. In the first stage, public companies were required to report about their preparations for the transition, and after that, about main financial implications that are expected.
Brazil is planning on adopting IFRS in 2010 for consolidated financial statements of listed companies and financial institutions. Current regulation will allow IFRS for insurance companies in 2010 as well. Brazilian GAAP will also continue to converge with IFRS through 2010.
The International Financial Reporting Standards will become Canadian GAAP standards for publicly accountable enterprises on January 1st, 2011.
India plans on converting to IFRS in 2011. Japan announced in late 2009 that they would be converting to IFRS in 2011. With Japan announcing that in 2011 they would be switching to IFRS, the United States was left as the last major economic superpower still using GAAP.
On November 11, 2008, the Securities and Banking Commission of Mexico announced that it was requiring listed companies to apply international financial reporting standards starting in 2012.
The SEC has proposed a roadmap identifying milestones to be achieved before the Commission considers required adoption of IFRS by all U.S. public companies. The milestones include continued improvement in IFRS, IASB accountability and funding stability, and finally, educational and training of academia students, investors, preparers, and auditors. From 2009 through 2011, the SEC staff will monitor the following milestones. In 2011, the SEC will consider the potential of making mandatory the use of IFRS by all U.S. public companies. With the possible phase-in of IFRS in the United States starting in 2014 and going through 2016. In 2014, large accelerated filers would be able to use IFRS. In 2015, any accelerated filer would be able to use IFRS. Then in 2016, all remaining U.S. public companies would be required to use IFRS. Breaking news, the SEC has pushed back the early filing date, and no public U.S. companies will be able to file IFRS documents in 2014.
Income taxes will be affected by IFRS in the following ways. The IRS still has not addressed the implication of adopting IFRS. Adoption of IFRS will impact international tax planning, intercompany transfers, and foreign tax credit utilization. IFRS does not include the same industry-specific guidance as GAAP. IFRS contains similar concepts, but does not have the same amount of detailed implementation guidance. Because of this less guidance, IFRS will require exercise of judgment. This judgment will also need to be supported by additional analysis.
The appropriate action for us to take at this time is to develop a game plan for conversion to IFRS, to continue to monitor SEC publications and documents, and follow the guidance from the SEC, as well as study companies that have already converted in other countries.